गुड इवनिंग। फिर से पैसा बोलता है में आपका स्वागत है। वेलकम बैक मनी टॉक्स। आई डिसाइडेड टू स्विच दिस channel from Hindi to English because we in Madras we are finding it difficult to get Hindi editors. So there will be a bit of Hindi, but mostly it will be in English because we want to continue doing this channel, but we are first struggling to find people who know Hindi and who can edit. So let me start with a new series on this. What my student asked me very recently is the relationship between gold and dollar. Normally, gold and dollar move opposite. When price of dollar keeps going up, then price of gold comes down. In fact, recently he pointed out to me when gold corrected to 1800, that was a 11-year low. Hardly there has been movement, and 2100 has been the high. But in terms of rupee, the gold has gone on tear, and today is trading at more than 61,000 rupees for 10 grams for a 24 karat gold with GST extra. What is the mystery of gold, and why? What is the relationship between gold and dollar, and therefore between gold and other currencies? Gold is a perennially favorite topic for me because my fellow countrymen love gold. So let me explain to you why gold is very important. When initially trade started, people were doing barter between two merchants or people who were providing services. Then it was found that barter was not a very efficient way to exchange goods and services. I may be having a farmer, I may be a farmer with thousands of kgs of rice. I want to get my hair cut and I go to the local village barber. Yeah, all other farmers would have paid him in rice and he would not will be willing to take rice anymore. Or he will ask for too much rice for the service that he is willing to provide. To standardize this, people had to introduce money. This money was had to be a certain good which will not be able to copy or produce by humans very easily. At several points in time, several commodities have been treated as money. In certain remote islands, seashells was considered as money. In prisoner of war camps in World War II, cigarette was considered as currency. In North America, for a long time, tobacco was considered currency. For some African tribes, salt was also a currency. So anything that was in short supply was considered currency. But universally, something had to be found, a metal which could not be easily found, which cannot be duplicated. It had to be an inert metal which could not react with other natural forces. The correct idea they found out was gold. Because gold was largely inert, it was malleable, it could be hammered into shape very easily, you could mint it as coins, bars, etc. Also, gold was inert in the sense that it is very difficult to find something to react with gold. Gold only reacts with mercury and forms mercury gold, and it can be separated easily. Thus, gold was selected as the currency. There was a gold standard currency, and then based on that, there were silver and copper currencies. Depending upon the amount of gold in a coin, the currency value would be decided. Then, merchants found it very difficult to carry gold, and they stored it with goldsmiths. And those goldsmiths would issue receipts so that gold could be transported across capitals in Europe very easily. Most of the gold was in South America, and when Spanish conquest made gold accessible and were being brought into Spain, several shipwrecks took place, and that is why you have shipwreck searches with gold baboons. All this ended in 1947 when they decided after the World War II at a Bretton Woods conference that dollar would be the supreme currency and all other currencies would be pegged against the dollar. But the dollar itself would be pegged against gold. Before the war, Roosevelt had decided that the gold was something that the Americans should not own. And he said for every ounce of gold, he would give $36. That was a random price that he picked. Yeah, ounce of gold is around between 30 and 31 grams of gold. And it's a fraction. And so everybody had to exchange it for the US dollar. And the government would make sure that it was always $36. But this was supposed this was a flawed system and definitely it would have broken down. It lasted so long, that was a miracle. It lasted till 1971. But dollar is a human concept and all human actions are fallible, as Soros pointed out. The Americans thought there is no end to printing dollars, They believed that they were surprised the world was believing them, so they kept on printing dollars over a long period of time. On 15th August 1971, Nixon realized that they had Americans had printed too many dollars, and if everybody came back and gave the dollars to the U.S. and asked for gold, there was not enough gold in Fort Knox. That's where the federal gold was stored for them to exchange it for dollars. He said, "The promise is over, and we cannot exchange gold. And thank you very much. Dollar is what you would get. You can keep it or lump it." And then the gold started to rally, and gold rallied from $36 to nearly $800 an ounce in 9 years. That is when there was the Paul Volcker era, when inflation in America reached 20%, when the world realized that America had printed too many dollars. Volcker increased interest rates, and the price of gold corrected to $200. So, what this episode taught us clearly is there are two pegs, there is a dollar peg and there is gold. Whenever the dollar is printed in excess, the price of gold keeps increasing. And whenever the cost of dollar increases, that is basically American interest rates exchange increases, the price of gold corrects. Most of this is expectations. So people trader, it all reflects what the trader expects to happen. When gold was at 2100, it was clear that America would tighten its monetary policy. As America tightened its monetary policy from 0 to 5%, the price of gold corrected all the way to $1,050. But beyond that, all traders have been second guessing when will this regime of rate increases stop and when will the rate cuts begin. Everybody is calling for an American recession. So, whenever too many traders have called for a dollar pause, you will see the dollar spike up and down. So, the spikes in dollars that you have seen in recent time is expectations from traders that the US will stop increasing interest rates. That is, the Fed will blink at the first time of crisis. This spike started when Silicon Valley Bank went bust, and there was another bank called the Signature Bank, which was forced to shut down. When these two banks shut down and the Fed came to rescue all the depositors, traders thought that the rise of interest rates has stopped and gold prices spiked to $2,000. But Jerome Powell did not blink. He increased interest rates by 0.25 and gold prices dropped to 1950. But gold prices have gone up and down in this space between 1950 and 2000 because most traders believe that Jerome Powell will be forced to blink. In India, the rupee has depreciated in this period from 70 to 83 at times. This meant that gold also had to become more expensive. India has been trying its best to curb import of gold by slapping usurious taxes, practically 15%. If you buy gold in UAE and buy gold in India, the difference could be anywhere between 12 to 15%. Gold is fungible and easy to carry, and there is a huge amount of gold that is being smuggled into India from Dubai, Pakistan, Nepal, Bangladesh, and Sri Lanka. Therefore, you have not seen the exact increase in the price of gold as expected. But gold has now traded many days above 6,000 rupees. I have been made famous for the prediction that gold will definitely cross 10,000 rupees. I am still certain gold will hit 10,000 long before I expected it. Before the turn of this decade, gold will definitely touch 10,000 rupees to a gram. When I first said this, gold was trading at 3,000. We have now reached 6,000. In Pakistan and Sri Lanka, gold has already crossed 10,000. We may get there slow. We will get there, but we may get there slightly slowly than our neighbors. Gold has appreciated against all currencies from 1971. Only the rates vary. In America, it has changed from $36 an ounce to nearly $2,000 an ounce. From India, for India, at that time, gold was 27 rupees a gram, has reached 6,000 rupees a gram. More is to follow, and that is why gold is very important. There are two classes of stocks one can trade in to hedge yourself against gold. More about it tomorrow. Thank you for watching. पैसा बोलता है, money talks. If you like this video, hit the like button, turn on the bell notification, and press the subscribe button of my channel. It's not enough if you just subscribe to this channel. Talk about it to your friends and relatives. Send this video to them and have them watch it. Once again, I thank you for your support for Paisa Bolta hai.